Today is the 16th of May 2016 and we are going to do our short strangle weekly option. The SPI is currently trading at 205.33 and we are looking at the straddle price. The straddle price will be 205.5. The put option is going for 145 and the call option is going for about 130. So the straddle will be costing us about 270. So we want to sell the strike that is more than 270. Let's look at the call strike first. So the call strike adding 270 to it, it will be 208.5, and I prefer to sell one or two strikes further away. And for the 209, we can sell for about 15 cents, and the 209.5 will be less than 10 cents. So we are not going to look at the 209.5 and we will just be focusing on the 209 for the call side. Now that we have identified the call side at 209, we want to identify the put side. The put side will be, we are looking at about the same credit for the put side. On the put side, we can go for 199 or 199.5. In this case, I think I will just select 199.5. So these are the two strikes that we are going to do tonight, 209 and 199.5, with the market trading at about 205.47. So I'm going to use the IB to do this trade. With the market at this, I'll bring up the call strike. And I'll bring up the put strike as well. I'll just arrange this strike in this way, so the call strike is on top and the put strike is below, and we have the SPI trading in the middle. I'm going to sell this call and I'm going to sell this put. So I've just sell this 209 call and I'm going to look to sell the put as well. The put has gone down a bit in price. Let me just wait a minute or so. I'll put in the stop order for the 209 call. I sell for 14 cents, so now I want to get stop out. If in case I'm stop out at 28 cents, the order will be a GTC order because this trade lasts until Friday. So the stop price will be 28. And then I'll just submit. I've settled the call side, so I'll now look back at the put side. I'll pause the video and come back. The put option has gone down in price because the SPI is moving up. I'm going to take the 14. The order is filled on the 14. I'm filled on the call side for 14 and I'm filled on the put side for 14. Let me put in a stop order first. So same thing, a GTC order, a stop price, and the stop price will be at 28. Now the call and put has both sell for 14 cents each, and the stop order will be 28 on these two sides. And today is Monday. I'll be updating this trade until Friday, and let's see how this trade turn out on Friday. Thank you. Okay, it is 16th of May 2016 and still Monday, and I got stop out on my 209 call at 29 cents. If your account is less than 25,000, do take note this one will be considered one day trade, because I opened a 209 call earlier this morning and now I'm stop out. So this is one day trade if your account has less than 25,000, but if you have more than 25,000 then there's no issue. Just have to take note if you're doing any other strategy that is also a day trade, then you have to take note. For this one I have to do a roll up or adjustment, and I will just take a look at the prices. On the same week, I do not want to roll out to next week or any further, because this is just a weekly strangle trade. So 209 I'm stop out, so I'm looking to sell higher, but let me look at the straddle price currently first. The market is 207, so let me take on the higher side, 207.5 straddle. It costs about 130 here, 130 on the put side, and about $1 on the call side, so it's about 250, 207.5 at 250 will be 210. So 210 is currently going for 13-14. Okay, I think this one is okay. I'll try to do this trade. 13-14. Okay, so I'll just take the 13 bid. Okay, so I'm done. I have sold 210. I'm stop out on the 209, but I re-enter the market at 210 at 13. So same thing, I'm going to put a GTC stop limit. We must always put a stop limit just in case. Sell for 13, so the stop will be 26. I'm going to leave this here, and I'll continue to update this trade on how it performed at the end of the day. The put side I'll just leave it alone, as I don't usually close out the trade. Welcome back. Today is the 20th of May 2016. It's Friday, and the option will expire today. SPI is currently trading at 205.66. On Monday, I opened the trade 199.5 and a 209 call, and the 209 call gets stopped out. I make an adjustment to 210. Both the call and the put has dropped to a value of 1 cent. I'm going to leave the trade alone, and most likely the trade will expire, but the stop loss is still in place just in case the market stop me out. I'll be updating this trade tomorrow